Hello, everybody, and welcome to the market briefing for the week starting November 7th. We got a lot to go over today, so let's get right into this. As always, everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All trading and investment decisions are your own and done at your own risk. Hey, why don't you go ahead and smash that like button, and we will move right on to see what we've got coming up this week for earnings. So, starting Monday morning, we have Palantir. That should be interesting. I know some people in the Discord like to watch this one. Berkshire Hathaway, it says here Monday morning, but they usually come out today. I haven't seen it yet, although I wasn't really looking for it, but Berkshire is always interesting, and I've got some of this in my portfolio, so I'm interested to see what's going on here with Berkshire. Monday after the close, Lyft looks like about the most interesting one to me. Some other stuff kind of okay in here. Tuesday before the open, Norwegian Cruise Lines. I think we've already seen some of the cruise lines, and I know some people are quite interested in these, so let's see. Tuesday after the close, Walt Disney, Oxy, AMC, we've also got Lucid down here. I mean, even Upstart and Plug, Affirm, all names that are closely followed. Wednesday before the open, we have Roblox. Also, the trade desk. I had been looking at this for a little bit of a swing trade, but with earnings getting close, didn't take it. D.H. Horton is one of the home builders. I don't think we've seen any of the home builders yet, so this might be the first one. So this could be really interesting if you're into the home builder space. I think they're going to be looking at a downtrend. So this is a space that doesn't really interest me anymore. And you can see, you'll actually notice this week, farther on down the list in these, we've got some of the cannabis names like Village Farms. We've got on Wednesday before the open. We've got more of them through the week as well. So on Wednesday after the close, we've got Rivian. That will be closely watched. I'm not sure if people watch Beyond Meat anymore. I know people in the Discord will definitely be watching Celsius. That one should be really interesting for us. Thursday before the open, we've got NEO. None of the rest of the stuff after that through the rest of the week really interests me at all. And I don't know if anybody in the Discord has got any of these names in their portfolio. So it's another big week for earnings, but it will now, I think after this week, it's going to start to slow down a little bit. And, we get into the second and third tier names for the next few weeks. Let's move on to take a look at what we've got on the macroeconomic calendar for this week. So on Monday, we have consumer credit. That will be fairly interesting. Probably not likely to move markets a whole lot unless there's a big surprise. Also, the blackout period for the Fed heads has been lifted. So they can go out and speak again, and they are going to be speaking every day this week starting on Monday. Also, actually, I didn't put it on here, but starting today is the COP27, the climate conference. It runs for 2 weeks. I'm not sure if we're expecting anything to come of that. With all the global chaos going on. I mean, I don't know if people are really going to care about the climate too much when we're more worried about nuclear war. But anyway, we'll see. If anything comes out of that, I will definitely mention it in the morning briefing and post that in the Discord. On Tuesday, we have the U.S. congressional elections. So this is obviously a big one. There's a really strong seasonal that starts right after the U.S. midterms. We have, as if the seasonal is for the four-year presidential cycle. So right after midterms, we come into the best 6 months of that 4-year cycle. Having the best 6 months right now, I guess the bar is pretty low, or at least it's low for what we've seen in the last year and a half. It's not going to take much to make the next 6 months look good. But hey, man, we'll take it. If we can have really good 6 months ahead of us, I'd be pretty thrilled about that. So, that's the seasonal. That's sort of what we expect. Another interesting thing about midterms and whatnot is this whole split government thing. The market really seems to like it when government is gridlocked, when they can't get anything done. So. The Republicans are expected to take back the House, which would then split. You've got a Democratic president, a Republican House, and probably a Democratic Senate, although that's a little up in the air. So this could be really interesting, and I suspect that if the Republicans took the House and the Senate, I think the market would really like that. Because there's just this, there's an impression, and it may not be totally true, but there's an impression that Republicans, are better for people who have money, better for the markets, and so, the market would probably, I think, rally on a good Republican win on Tuesday. On Wednesday. Also back to these elections. I believe, if I remember correctly, remember I'm Canadian, right? If I remember correctly, some of the results start coming in really early in the day down in the U.S. But I don't think while the market is still open so much. There'll be polling results and that sort of thing that come in early. But the real results don't come in until much later in the day in the evening. So this is sort of probably more of an after hours effect or a pre-market effect on Wednesday, and then of course through the day on Wednesday. So on Wednesday we have final wholesale inventories. It's a reasonably important number. We also have the 10-year bond auction, and considering everything that's been going on in bonds and yields, I think that will be fairly important. It's probably not likely to really change the direction of the market, except in the very, very short term. You definitely see some movement in the indices if there's a big change in yields because of this auction. On Thursday, we have CPI. Everybody knows that is really important. That will move markets and could set a new trend. Although by Thursday morning, markets are still likely to be volatile on this election fallout, right? So CPI on Thursday, unemployment claims as always on Thursday. On Friday, we have the University of Michigan consumer sentiment and inflation expectations. So we've got a busy week, starting with these elections. But I think, we had the Fed last week. We got another rate hike. We're expecting another big rate hike in December. It seems like everything's really kind of coming to a head now. We've been waiting months for this, right? Especially for the election. And, we've got CPI in the same week. This is a big week, and I really think this could be a trend-setting week for the markets this week. It could really, if we are starting to trend up, and I kind of think we are, it could really solidify that trend and really turn that into a nice strong rally, and one that finally carries through and doesn't look tepid and weak and really makes us wonder what's going on. Conversely, if these elections don't pan out the way the market wants to see, if CPI comes in really hot again, and along with some of this other data, if it all just starts to look, or continues to look bad, that could really put the market into a bad mood, and we could be looking at new lows. So let's take a look at the charts and see where we're at with all of this, see what happened last week, and where we might go moving forward. So, as always, start with the SPY representing the S&P 500 index, and this chart should look really familiar to everybody. One new little addition to this chart. Okay, so look at we had the Fed, and obviously the market caught a little case of irritable Powell syndrome again this week. This was Fed day right here. We came down a little bit the day before. Not surprising, right? We'd had a really nice rally. Not at all surprising to see on Tuesday, the day before the Fed, to see people taking profit. And that profit taking sort of continued into Wednesday. Once the announcements came out, if you looked at the chart intraday, and we talked about this in Ticker Talk, you can go back and watch the video from Wednesday because we talked about this a fair bit and we looked at the intraday action. But intraday things were looking good until shortly after Powell started speaking, and then it got really nasty, and we broke through support, and continued on down, and then it followed through a bit on Thursday. But interestingly, if you draw a Fibonacci from the low, this CPI low on October 13th, to this high from Tuesday, you can see we've got a 50% retracement right here at, it's hard to see there, 369.25. And I mentioned this in the morning briefing, actually. I mentioned that we've got a support level in around 370. We've got this Fibonacci at 369.25. I felt we had a really, really good, strong chance of bouncing right there. And sure enough, it did. And that continued on Friday. Now, Friday was, kind of got a little ugly, right? I mean, we gapped up, opened nicely, came down a lot, retested this level basically, and then went back up again. So this is a nice makings of a potential reversal candle here. It's not exactly a hammer candle. It's a technically it's called a dragonfly doji, but this is bullish. Had some pretty decent volume. I noticed that on Friday, people in the Discord were talking about the volume being low, and I'm just like, what are you talking about? For a lot of the day on Friday, volume was running at 1.5 to 2 times normal. You can see we've come in, reasonably high. A little higher than average for our recent past, but over the longer term, definitely higher than average. So that's the S&P 500. I think we continue higher here, but again, there is so much macro that could affect these markets. It's really and would overwhelm technicals. Everything that's coming up is definitely strong enough to overwhelm these technicals. But you can see we've got decent support below. We've got a little bit of resistance overhead. I think this 380 level should be an easy to break through there. As we get up into here in the 388 to 390 area, that probably becomes a little more difficult. But again, if we come up into, say, 380 on election results, and then we get a decent CPI, I would have no problem seeing this break through 390 strongly, get up to 400, maybe even this 405 target from this head and shoulders bottom. Very interesting week coming up. The charts are really interesting stuff going on in these charts too, and you'll see in a lot of the charts that we're going to look at today some really interesting stuff going on. Some really nasty looking stuff too. I mean, let's face it. I mean, it was not a good week. It's a down week down a bit for all the indices, but this was a nice turn to see on Friday. So we'll look at the Dow. I know, kind of haven't been looking at this, but it's just been so strong. I can't ignore it anymore. The Dow is still in a downtrend like all the other indices. It's in a long-term downtrend, but in the short term, it's had a very, very strong run up. You can see this. A lot of the stocks in the Dow are obviously in the industrial index, the industrial ETF, which we'll look at in a sec. And they look, much the same as well. But yeah, the Dow has been outperforming all other indices. Even the Russell 2000, which is sort of, I'd prefer to be in rather than the Dow. But if you want to be more conservative, maybe this is a place to be. However, it is pulling back from this trend line, and that trend line has led to some nasty pullbacks in the past. The sooner it can get through that trend line and through this 200-day moving average, the better for the Dow. All right, let's move on to the Qs. The Qs are just ugly. The only good thing I can say about this chart is the Qs did not come down and test this pivot yet. They tested the level just above it and bounced. So that's a good sign. But it's just looking ugly, and the components within this are the big components within it are looking pretty nasty too. So I think we just got sideways in the Qs. I'm ready to kind of give up on the mega cap tech for now. I think there's a year or two of sideways in all of this, but there will be other opportunities in the market, and we will find them. We don't have to be in mega cap tech to make money. There are definitely other opportunities out there. So let's go looking for them. Let's look at IWM, the Russell 2000 small caps. You can see that this is still, after a pullback, still holding its uptrend, which is good to see. I adjusted it slightly. The trend was a bit higher. It doesn't concern me that I had to adjust it down a little bit. And you can see we had that nice reversal off there. We've come right up into some resistance, though. I'm not too concerned. I think we're going to continue higher in this. But again, caveat being, we've got all that macro coming this week. Let's take a look at the volatility index is interesting. Now, look at the charts we've looked at, right? With big move down. We had the rally and then the big move down in our indices. And what is the volatility index doing this whole time? It's going down. So why is that? And I think that the reason is that everybody who wants to be long volatility, and especially with everything we've got coming up this week, coming into these elections and everything, everybody expected volatility to be really high. And we've had the Fed and we've got CPI coming. I think everybody who wanted to be long volatility was long volatility. There's nobody left to buy volatility. So we go down, right? Where else are you going to go if there's no buyers? There are people who are going to be selling. The Fed has gone past. Maybe people are a little bullish about the election coming. They're going to maybe getting out of their volatility trades. And what we might be seeing here could very well be the beginning of a long squeeze. Now, you probably don't hear, some of you probably have never heard that term, but basically a long squeeze is exactly the opposite of a short squeeze. It's where everybody in a trade is on the long side. There's no bears there. Nobody's selling. And once they start selling, though, and nobody wants to buy, it just crashes down. And I wouldn't be surprised. Now, especially if the market starts moving up, and especially on the election results, if the market is rallying on Wednesday, I wouldn't be one bit surprised to see this crash all the way down to 20 and maybe even lower, maybe even through that really big psychological level of 20 on the VIX. Wouldn't surprise me one bit. Now, that being said, I do not want to short volatility. Let's go back to 2018 and look what happened when everybody was short volatility. There we go. Everybody and his uncle was short volatility at the beginning of 2018. And look, volatility was down here in 12. When I saw this, starting to go up a little bit in this area, for no apparent reason, because there was nothing going on in the market. I'm like, what's going on here? And everybody has been short volatility. Volatility has just been going sideways for months and months and months. I went long volatility in here, and I started to regret it here, and then all of a sudden it started to pay off, and it paid off huge for me. Volatility spiked all the way up into 50 in 3 days. It went just absolutely nuts. That's a huge move, right? It was from down here, where were we? 1250 up into 50 in 3 days. This blew up a bunch of hedge funds. It blew up a bunch of retail traders. A lot of people, unfortunately, lost their shirts in this move. And so that's why I will never go long or never go short volatility. Long volatility is another matter. We don't see this kind of move to the downside in volatility. A big move to the downside is going to be 5 points, 10 points over a few days, not not 40 points. So there you go. A little lesson on volatility, because I know a lot of people watching this won't have been around in 2018. And are probably listening to me here and saying, well, why not just go short volatility if you think it's going to come crashing down? That's why. You can really, really get hurt. This is a really dangerous thing to play with. All right, let's move on to our 10-year yield. We can see that after the Fed. Oh yeah, this is another one that was a little weird, right? On Fed Day, this really didn't go up. I thought for sure this is going to break out of here on Fed Day with the way the market was going down. It wasn't until the next day that it gapped up. So a little bit of a delayed reaction in the bond yields. But you can see we gapped up one little higher, then pulled back, and now we're going sideways again. Might be building a base on base here. Let's just draw that in. There is the potential for a base on base here, which is quite bullish. If you want to be bullish on yields, I'd rather not be bullish on yields because that's not good for equities, as you know, right? I'd rather see this just roll over, and if the market's going to rally, this is going to need to roll over, and will roll over if the market's rallying for its own reasons. Again, all that macro coming this week. Let's take a look at the dollar index. That is not the dollar index. Okay, so you can see that the dollar had quite a volatile week along with the markets. It had been pulling back, and then this week started to make that move upwards again, and with the Fed, no surprise that it went up after the Fed. Came up into that former trend line, hit it, and pulled back really hard, which is really nice to see. We had a good day in the markets. Markets on Friday. Commodities had a great day, and I think that this dollar pulling back and the markets and commodities going up, it all kind of fed on itself, to give us a big down day, which is really nice to see. I'd like to see continuation of that and break through this trend line, break through this support here. We should watch out for that little pivot right there too. We've got a pair of lows here that may act as support. So let's draw that in as well. Okay. So that's our dollar. While we're here, let's take our look at our dollar cost averaging system. If you remember last week, I said I thought this is the week that we're going to see this turn green again. It did not, obviously, because we had a down week, but you can see this MACD is even closer to crossing over now. So we're getting really close to turning green. If we have an up week, this goes green this week for sure. So again, if you're confident about the election results, if you think that CPI is going to come in lower than expected, you might want to turn your dollar cost averaging back on your indices. However, if you're dollar cost averaging into the Qs, I don't think you should be turning that back on anytime soon. I think there's still more downside, or at the very best, sideways action in the Qs. So won't be turning that one on even if the system goes green. And IWM stayed green. I'm a little surprised, but this stayed green. This turned green last week, for last weekend, and has managed to stay green just barely. But again, I'm a little on the bullish side this week, so I think that this is going to be green when we look at it again next weekend. Okay, let's go. There was some big movement in some of the metals this week. Basically, any of the industrial commodities and that sort of thing had a really good week. Not so much the agriculture, but this is gold. Look at this big, huge move in gold. You don't see big green days like that, or even red days, that big very often, right? This day back in end of September was one of them. I guess maybe this gap up day here, but you can see this is a big outsized move for gold. However, the 1680 level is important for years. We can go way back on that to early 2020, okay? Very important level, that 1680. Couldn't get through there. And you've also got the 50-day moving average right there as well. So be interesting to see what happens on Monday with gold. If it can break through there or if it needs to consolidate a little bit first. The miners didn't do quite as well. It was, with the equities being so volatile this week, it's not surprising that the miners didn't do as well as gold itself. And we'll see the same thing when we look at oil companies. Silver also had a really good day. On Friday. Big up day. Right into that level, though, that area where it failed before. So again, be really interesting to see what happens here. Can it get through here? Is it going to fail yet again? Copper had a huge day on Friday. Look at this. It spent months consolidating in this range, and it covered almost the entire range in one day. So if you were in this, great. But what do you do now? I mean, you can't chase this. And so I think this is the beginning of a big move in copper. But I'm not sure how to get in it. What I really want to see, I think I don't even need to say it, right? You know what I want to see. And it's a consolidation right in here for a few days, week even, and then break out. And then, I'll be looking at ways to play copper. One of those ways. Now, that being said, I think we go higher from here. I think this is going to be good. There is the risk that it pulls a silver. Remember, we were talking about this move in silver here and how strong that was. It was only a few days long, and it totally fell apart. It totally failed. They got out of that trade so quickly. So we definitely do not want to see copper pull that kind of thing. There is the risk of that here, so we got to be careful. And that's one of the reasons I want to see it consolidate and digest this big move. So a couple of different ways that you can play copper. One of them is Freeport-McMoRan. It's one of the biggest copper miners in the world. And you can see ginormous gap up here, just huge. So how do you go and how do you buy that gap? You can't. You gotta wait for a setup in that. I guess if copper's going, you could chase it. I'm not going to chase it. That's not my style. But it's a nice move. I mean, look at it went right through resistance. Let's see if it holds above. I think the best thing to happen here would be to kind of pull back a little bit. Maybe have a day or two down here, then start moving away. That could give you a decent buy. So, if this copper stuff interests you, keep an eye on this one. If you want to kind of spread your risk a little bit, you could look at the COPX, the copper miners. This one is kind of, there's a little bit of minor resistance in this area. I don't like how gappy this is. This is gappy like this because a lot of the holdings in this will be offshore, right? This is made in, a nice pennant here. It's broken out of that. You got the giant gap though. So again, gotta wait for a setup in this. But if you like copper, this can be a good play as well. Let's look at DBC, our General Commodities Index, and you can see big gap up in that, right? I will draw the gap in on this one. So huge gap up. Nice to see this, starting to move up and now making higher highs, right? So this higher high confirms this higher low. So the beginning of an uptrend. Here, let's get rid of this downtrend line here and get an uptrend line in there. Let me tweak this a little bit. Let's get that there. Yeah, okay, that looks better. All right, so Yeah, we've got a new uptrend here. It's now about 6 weeks long, so we're getting nearing potential intermediate term uptrend. We've got that pivot from back in August, just overhead. I can see this making continuing on up and maybe consolidating up here. Of course, I mean this is volatile. It is gappy. It's really dependent on some of the big commodities in here. Like oil, for instance. But a lot of these metal commodities are in here as well. The agricultural commodities are just a choppy mess. Nothing going on here. I think that they'll probably pull this off the list for the update, because I think there's better places for us to spend our time. I'll still keep an eye on it. If anything happens here, I'll definitely bring it back. But for now, I think it needs to go off the list. Let's take a look at crude. All right, so big day on crude. Up, 5% on Friday. And it looks like we're going to get a breakout of this head and shoulders bottom pattern here. And the target on that will be somewhere up and around 115. This all sort of times out, with the elections. Everybody thinks that after the elections, Biden is going to start refilling the Strategic Petroleum Reserve that he's emptied to 1984 levels. He's got to start refilling it. And when he starts refilling it, the price of oil is going up. And unfortunately for everybody, that means the price of gas is going to go up too. There's no way to avoid this unless you just drain the thing completely. But I mean, it's getting near lows. Like I said, it hasn't been down this low since 1984. They don't know what's at the bottom of this. The bottom of this thing is probably full of sludge. You can't go much lower because they haven't been down this low in 40 years. It's insane what's going on. So anyway, it's going to get refilled. They're going to start doing that probably almost right after the election, certainly in the next month or two. And that's a tailwind. That's a catalyst for oil, along with all the other international catalysts for it, and winter coming. Natural gas futures have been choppy. Kind of drew a little flag here and are trying to break out the upside of that, but kind of stalled right at some resistance. Be interesting to see what happens with this on Friday. Natural gas can move. It can make really big moves, and a big move could definitely start like this. So this could be really interesting. Definitely worth keeping your eyes on if you want to play the commodity itself. You could play it with UNG, you could play it with an ETF like a triple leverage ETF like BOIL, BOIL, or you could play some of the companies that we have already looked at plenty of times. XLRE, the general sort of energy sector ETF, is right at this all-time high. Momentum slowed here, tried to go up. This is a little indecisive for my liking in here. After that consolidation, I'd really like to see that just blast through there. Same goes for XOP. It's not quite at that high yet. In fact, this one kind of stalled out at this gap. I would like to see, it had a nice consolidation. You don't want to see it stall out after breaking out of a consolidation. You want to see it just blast right on through. And again, I think I've mentioned a number of times, this is a really crowded trade. If this rolls over, it's going to come down quickly, so be careful. Oil services, that one has gone right up to its all-time high and kind of pulled back a little bit, having a little bit of an indecisive day. Marathon Oil. So this is a play that myself and I know a number of people in the Discord were in, coming out of this flag pattern here. Now I got, so we had earnings on the afternoon after the close on Wednesday. Coming into Wednesday, I thought, okay, I saw this here. I thought, all right, this is nice potential for breakout. If this breaks out, on Wednesday. I thought, okay, I'll sell some of my position on the breakout because I don't want to hold the whole thing going into earnings. We went, we gapped down on Wednesday morning. Started continuing down. I immediately sold some, and then it was, quite weak. Was showing no signs of recovering itself. So I sold some more, or sold the rest of the position basically, and got all the way out, up in the top third or so of this candle. I was happy, reasonably happy with this trade. I expected this to go farther than it did, but got a nice profit out of it, and that's good enough, right? So then we had earnings. Earnings were all right. It gapped down the next day, and then had a really strong day on Thursday, and gapped up on Friday. Right into this resistance here. So obviously I wish I was still in it, but getting out when I did was the right thing. I mean, I'd given it lots of chances, and it's just coming into earnings, it had just run out of chances for me. When it was unable to break through, I mean, you can't hold that into earnings. So next step on this, if this were to consolidate sideways and then break out to the upside, I'd go back in it for sure, because that target off of this pattern here is up in the high 30s, right up in around 39, and so if I can get in at around 33, well, that's another $6. So I'm still keeping my eye on this one and not afraid to go back in this. 10. Our solar ETF, choppy as always. Gapped up really nicely on Friday, but then pulled back most of the day. So that's a little odd. Not sure what's up with that. First Solar is one of the companies here we've been watching that did break out. Finally, it's interesting that it kind of after falling out the bottom, it just started to trend up and pretty much non-stop up. Now, it's I'm not sure if this 160 level is... if it's ever been up this high before. It has been up this high before. Oh yeah. Yeah, you can see now why it would have found resistance up in that area. Okay. Yeah, it comes off right off of these here. So let's get that in there. There? No. Yeah, I think it was right off of these levels. This one here. That's the first place it kind of stalled out at that level. All right. Okay, so there's some resistance there. It's found resistance there in the very distant past. Stocks have memory. It's really surprising. But so what do we expect? Probably we expect some consolidation in here would be the best thing to see. Maybe you could play the break out of that. I don't know. I mean, this thing is up so much already that it's hard to be playing breakouts and everything, up this high. I think we can find other opportunities in the space. However, one of the other stronger stocks in there, ENPH, is kind of doing nothing right now. Back in this range, in this consolidation range, is just kind of hanging out in there. We might pull that off the list for a little while as well if it can't do anything. All right, let's look at go into some of our sectors or other equity sectors here, and we are looking at consumer discretionary. It is quite weak. It's at these June lows. You don't want to see this knocking on the door down here. Come down and test this enough, and it's going to break down through. The industrials, I mentioned earlier, these were quite strong. You can see this trend is nicely intact. Had a little pullback to it and bounced away from it. Really nice and strong. I still, the funny thing is, though, I can't find any decent setups in any individual industrial companies, which is really weird. So, if you're going to play this, it almost has to be with the ETF. Financials. Also another really strong sector. Had a little bit of a cut through on their trend line. I should probably adjust that. There we go. No concern, you know, having to adjust that trend line. You know, it had a nice run. It was due for a pullback. You know, the whole market was looking nasty, okay? And this has moved back up nicely again. No reason to think this won't go higher. I've got a couple of setups in the financial sector. We will look at those in a few minutes. Technology, as I'm sure you know, is looking pretty bad. It had a really bad week. Technology, I think, was the second worst sector this week. But we had this nice reversal. Now, we came down and, you know, look, we had these gaps. These gaps go way back into the past, but we should probably delete them because they've been filled, right? But we did get a bit of a bounce there. I should probably actually turn that into a support line. Right off of that. Okay. Bounced nicely here. Got a, you know, pretty much a hammer candle on pretty decent volume. It's got to follow through, though. And, you know, like the Qs, I don't think it follows through much. I don't think we should have very high expectations for this. Hopefully the bottom is in this. Don't want to see it coming down any lower than this. Certainly don't want it testing this CPI low. I guess we need to get rid of that trend line altogether. We'll see if this moves up from here, and you know that could give us a bit of a shallower trend line, which would be good anyway. Let's take a look at the communication sector, which I think was the worst one of the week. This managed to find some support. I think the support goes back into like around the COVID times. Yeah. But I mean, this is, oh man, this is looking so, this is looking so weak here. But again, a little bit of a hammer candle, giving people some hope here. But I don't know, man. I just don't want anything to do with these communication sector stocks. And speaking of that, let's take a look at Meta. Meta is a disaster. There's some support down here in the 78 to 80 area if it continues down. I mean, the only thing you can say, good thing you can say about Meta is they're kind of sort of a hammer candle. But you know, I don't know. Why? You know, why are we even watching this anymore? I think this just needs to go. You know, this is one that, you know, I could easily see this going sideways for 2 years. You know, maybe the 80 to 100 area for the next couple of years. I doubt that we're going to see it move back above 140 anytime soon. Yeah, it's this is sideways. This company has got a lot of work to do, you know, unless they have some massive breakthrough on their metaverse thing, they may need to pivot to something else before we can see, you know, a move back above 140 or certainly up into new highs. If you're in that, I'm sorry that I'm so bearish on the stock, but I have been for, you know, a long time, as you know, and I feel for you though, for sure. Apple, on the other hand, I'm not sure why Apple is being so weak. I mean, they do seem to be doing things right. I mean, they're having trouble with some factories and whatnot with the zero COVID thing in China, so that's not helping them. But I'm surprised to see it this week, and it kind of worries me a little bit. And again, you know, Apple could be another stock that just kind of goes sideways for a while. Probably, you know, certainly not sideways as long as Meta's going to be going sideways. It is still the outperformer in the group in the mega cap tech, but kind of weak here. Amazon, very weak. Trying to bounce, you know, can give you some hope. I'm not sure where our support levels are. I don't have anything drawn in here. I guess I got to get where down here. Yeah, and around 85 should be some support. 85 there. There. Yeah, let's see what if 85 holds on this, you know, if it continues down. You know, maybe we get a turn, but I just, like I said, I keep saying, man, I really think that, I wouldn't actually, with Amazon, I wouldn't be surprised to turn it back up. On a turn back up, we can get into this, get above 100. And I think we're seeing the range. 100 to 125 is probably the range that this is in for the next year or two. Netflix. This is quite interesting. Some really good lessons here, I think. There's the lesson to not wait too long before you get in. But this week and on Friday, so Friday gave me anyway, an awesome setup in this, in my opinion. I really liked it. It failed. I got stopped out, but I really like the way this set up. You can see that we had this gap, right? And you had this pivot, you had this pair of lows right here that were just above the gap. And so, and also you had the 200-day moving average and the 21-day moving average just underneath here. So you had in this area massive cluster of support. So when we opened on, we gapped up on Friday, went a little higher, and then we pulled back. And when we pulled back, and I need to show you how this works intraday, but you can see how there was, coming into this day, all this support here. So as it started coming down into these support areas, you're thinking to yourself, okay, if it should bounce here. There's lots and lots of reasons for it to bounce here. I want to be aggressive on this and try and get in. So we go and look at our intraday chart on this. Okay, and so we're looking at a 5-minute chart here. Might be even better actually if you will look at a 2-minute chart. We'll zoom in a little bit with a 2-minute chart. Go back over here. Let's look at these levels. The ones that I was really sort of keying off of were this 266 from these two lows just above the gap and this pivot. So, all right. Let's go over here. So yeah, so we gapped open and then we got weak right from the start, right? And it's like, ooh, scary. But we come down into here. We came all the way down actually to around 262.50, which is right where that gap was. Okay, so if we go back to the daily chart, you can see when we came down to 262.50, that's this pivot low here. Okay, so we move into the gap a little bit and then we start holding there, right? And start to turn up. We turn up a little bit, roll over, and put in a nice big green candle, another big green candle, right? So basically we're putting in a higher low. Once we broke above here, I thought, okay, here we go. We're coming off those lows. This is a great place to get in. It's kind of confirming, and everything was going great. Got in, started showing profit, and it started showing weakness up here. When it got up into the previous day's open and close here, I started getting a little concerned because it couldn't get through. It pulled back a little bit and it couldn't get through again. So now, like, my guard is really up on this, right? It's pulling back. It pulls back some more. It comes into this level and it starts to support right where it should, right? Consolidates, supports. It's like, okay, if we can break out to the upside of this, all good. And then, I'm thinking at this time, right, if we break out to the upside here and then we can go up here and break out above this, I want to add more up here. But if we can't break out here and we break down below this consolidation, I don't want to be in this. And you can see nobody else wanted to be in it too when it broke down. So I got out down in here with a very small loss. It was definitely worth a try. It was a beautiful setup. It just didn't have, and the market wasn't helping it either. The market at this time was falling apart too. So, it's one of those setups that unfortunately didn't work out, but I would take that trade every single day of the week. So good lessons in there. If you have been looking for a place to get into Netflix, didn't want to chase it like me, go and look at this chart, look at that intraday chart from Friday, and see if you see the same stuff that I'm talking about, because I think that it was a pretty decent setup. Now, going forward, what are we going to look for going forward, right? Because I still think there's decent setups in this. After this earnings gap, It's pulled back a little too much in my opinion, so it's got a setup, but I can imagine good setups here. So we pull back into maybe this 251 to 252 area where this support line is, also where the bottom of that gap is, the bottom of the sort of newer gap, the gap in a gap. Or do we come all the way back down to the bottom of the big gap that, you know, goes back, remember that big gap right there, right? Do we pull all the way down to the bottom of that and this 50-day moving average and what was, you know, resistance kind of inside all this consolidation? I think that's where we pull back to. And so if we come down and instantly bounce off of that, I prefer we stay down there for like a day and then do like the following day, do like a red to green kind of thing and move up out of there. Once we get above this 251.60-ish spot, or maybe above the low of this candle right here, Friday's candle, I would jump in that, I think, and especially if I got a nice intraday setup. Another thing this could do is maybe we get a little bit of capitulation and it kind of flushes down to this 50-day moving average and then does a strong reversal. And maybe you get that capitulation on the intraday charts. You get those capitulation kind of candles and then the reversal out of that. Well, that would be another good signal to buy this. So I think that over the next couple of days, next few days, we need to watch Netflix closely for an entry because I still think that I think that Netflix is a little different from some of these other mega cap. I guess it's not even a mega cap, is it? 116 billion? Yeah, no. It's a little different from some of the other large cap tech, and I am quite bullish on it. So, and you know what? Our risk in here, playing these little plays, our risk is like nice and tightly defined. Because obviously, if you're buying a bounce off the 50-day moving average, you can have your stop like right below it, and especially if you're playing an intraday setup. So, I think it's worth a go. You know, certainly worth keeping an eye on. All right, let's look at Google. Nasty week for Google, but it did put in a potential reversal here. So. And you know, right around some major support. This major support goes way back into 2020, or I think it is, or yeah, back into towards the end of 2020. That major support level. So good to see it hold that for now. Got to move up out of there, right? Microsoft. It also had a bad week. It also is trying to bounce in an area where it should bounce. And you know, forming, you know, a nice potential reversal candle. Tesla also bad week. Not a good day on Friday. You know, when a lot of stocks were having a decent day, but it did continue to hold this 206 support level. That's a really important level, and it closed above it. But it's got to move up because there's a lot of dead air below this level, right? You know, the next place you'd expect this to hold is 186 if it breaks, or maybe 200, right? I mean, you've got the 200 psychological level, but you know, I don't know. I think 186 is more likely if we lose 206. Semiconductors, interesting stuff going on here. So it had some weakness, not as weak as the rest of the market, certainly not as weak as the rest of tech. It bounced right off of that former downtrend line that it had broken through, right? And it gapped up nicely on Friday. You know, put in a nice little potential reversal candle here. Obviously, we've got to get above this, you know, we've got to get into this gap, get above the 50-day moving average, and then go and attack these highs up here. But this is some really interesting price action. And, you know, something, if you wanted to play this ETF, you could even play this ETF just on a move higher on Monday. Or maybe, if that ETF is moving higher on Monday, maybe it'll be time for AMD to break out of this base on base. You know, we pointed this out last weekend. it's a nice pattern. I like it when you get these setups, this base on base setup, and it looks ready to break out of here. So that's something worth watching on Monday. Healthcare, another one of the stronger sectors, but it pulled back quite a bit, and right from resistance too, right? So this obviously needs more time. I think we're going to see some consolidation in here for a little bit, and I'm talking, a week or two, not months. But once this moves back up in here, it'd be nice to see some sideways before it breaks out. XBI, the biotech ETF, it's continuing in this channel. It gets to the bottom of the channel, it bounces off it. Good for mean reversion traders, I guess, but the channel's not that wide. What do you got at a low here? 78 to 85. I don't know. It's not that great of a mean reverting trade in there. But anyway, REITs. REITs still holding their uptrend after a little bit of a pullback. Not that interesting though. Staples. Came up into resistance, pulled back a little bit, found support at the 50-day and 21-day moving averages. A little cradle there where it bounced off of, but obviously it's going to need to continue higher, right? We don't know that this is a higher low yet until we make a higher high. And that higher high is going to be right up around the 200-day moving average. This will be interesting to see what happens next in this. Utilities. These were a little choppy in the last little bit. I think, we're kind of consolidating in here. That's fine. It's utilities, right? Utilities usually go sideways. They're not usually this volatile. All right, let's take a look at some of our setups. Now, last week I pointed out GOGO, and I remember I said, it's got earnings coming. It's going to be hard to do anything with this. And then it had, because it was this consolidation that was, nice tight consolidation there, beautiful bull flag. It was that we were kind of looking at. And then before earnings even, it gapped up a lot, and then it just got this messy consolidation, and then you've got your earnings candles and big wicks. But I still like this. I mean, this really looks like it's going to go higher. The problem is, it's got really difficult risk reward now, because you kind of almost have, now you've seen that it can put these big wicks in, you've almost got to go below your stop and almost have to be below this consolidation and the 21-day moving average down here. So that's kind of sketchy. But, I mean, you could just play this really small. For a break above, I would probably be inclined to play a break above Thursday's candle. Or even, maybe if this gap down a little bit on Monday and then came out above Friday's high, that might be a place to get into. So this is still interesting to me, and one of part of the reason it's still interesting is because the target on a move out of here, the breakout out of here, is way up here at around 17 and a quarter. And look at that, right at a resistance level, right? Love it when those targets come in right on those resistance levels. Down here, yeah. So up and around there. So, I mean, that's a decent move. You can get a decent entry in here. That's a couple of bucks on a $15 stock. I'll take that. So that might be worth a watch, but it's a tough one. It's a tough play. The problem is going for the couple of bucks is, if you get in there at 15, you're unfortunately risking down to 13.50. You're risking $1.50 to make two. It's not the kind of risk reward I like. So I don't know. Maybe there'll be a nice intraday setup, and I can have a tight stop and just play it smaller. Maybe start it out as a scalp, and then try and turn it into a swing trade. But I'm not going to force this thing. No way. So it was GOGO. Robinhood was another one that I kind of really like the setup, right? Like this big rounding bottom. You had this kind of flat top here, and it broke out of there, but this breakout just seems kind of weak. It had earnings, of course, right? Pulled down a little bit on the, broke out before the earnings, which is unfortunate. Pulled back a little bit, and then we've started to move up now after earnings. I kind of want to see another setup here before I will get into this one. But if you really like this stock, this is an okay setup here. You could just buy above Friday's candle, but I don't know. I want to see something better. Wells Fargo. Whoa. Sorry, I am just seeing some wet snow falling out of the window, which is really weird for Vancouver. It's only, the middle of November, the beginning of November. Anyway, that's not going to be sticking to the ground, though. It's kind of rainy, very rainy kind of snow. All right. You didn't really need the weather report for what's going on in Vancouver. It's just surprising to see out my window all this white. Okay. Moving on. Where are we at? Yeah, Wells Fargo. All right. So liking this. This had earnings a while ago. It moved up a bunch on earnings. We know the financials is one of the stronger sectors. This sort of broke out, pulled back a little bit because of the Fed, of course, right? And now starting to move up again. Not sure how I want to enter this, but I like it. I do think this is going to go higher. So that's Wells Fargo, Charles Schwab. We've looked at this a number of times. This is probably this would be a better play in the financials, in my opinion. We've got a bull flag here, right? We've got a reasonably tight. I mean, it's unfortunate that this came down on these 2 days that low, because otherwise we were having a nice tight consolidation here in the bull flag, which is always nice to see when they're tight. But this looks ready to, break out here. Maybe one more day. If it can come back up into here, put in another tight day like one of these 2 days back here, and then go. Target on this is saying like in around 96, and 96 is your, I believe it's maybe not an all-time high, or is it an all-time? Oh, it is an all-time high. Yeah, okay. That 96 level is your all-time high. So you'll definitely want to be, if this goes and it gets up into there, you're definitely going to be wanting to trim some, if not all, of that position if it gets there. This is a sweet little setup here. So this is one that I'll be watching through the week. PayPal is interesting for the bottom fishers. You can see that on Friday we had a bounce right off of this pivot from the May low. That's interesting, and it's a strong bounce, right? And it's kind of a hammer candle. Look at the volume here. I like it. And this may just be the kind of thing where you have to bite the bullet. What would be awesome is a little bit of a gap down and then go red to green, and then you buy when you break out above Friday's high. I suspect, though, that we're going to see a gap up. And so you'd have to look for some, an intraday pullback or something that you could get in on if you wanted to get in on that play. This one, Prophase Labs, is a pharmaceutical, PRPH. It's got a nice bull flag, and reasonably tight considering what the market has done. It looks ready to go. Again, maybe it needs a day, a tighter consolidation, or a day or two, right? If we can consolidate in the top half of this consolidation, that'd be totally sweet. Breakout out here is, obviously you buy the breakout and you target up close to 16, which is a major resistance level that goes way back. Back in here in 2021, back over to here in 2005. So I suspect that, if you can get that breakout and it's coming into this level, even this 15, if it comes up into 15, I actually should draw that in. Get this line up here. Gets to 15, you want to be taking some profit there. And maybe trying, holding a small piece for a little bit more move up into 16, but you're really kind of pushing it if you're holding it for trying to get a move beyond 16. I doubt it goes beyond 16, even really 15. I doubt it goes beyond 15 on the first try. All right. That is it for setups. Let's see. Oh, I don't have the calendar, but we've got a ticker talk coming up on Wednesday. The November calendar has been posted, and so we'll get that in the next video. I'll show you the calendar, what we got coming up. So thanks for watching, everybody. Hit that like button, subscribe if you haven't, and enjoy the rest of your Sunday. And we'll see you all on Monday.